Hey everyone, welcome to Costco Stock Fundamental Analysis. Do you know why 81 million households pay an annual fee just to shop at Costco? How do Costco just mark up at 14% and 15% of their cost but still be profitable for more than 3 decades? And why do Costco intentionally stock very less products in their warehouse but still be very relevant in the retail world's business? So that is what we would find out in this series of Costco's fundamental analysis. As I perform any fundamental analysis of a business, I would divide it into 5 different parts. This is going to be the first part of Costco's fundamental analysis, that is understanding their business model. And the second part is going to be the analysis of historical income statement. Then the third part is going to be analyzing the cash flow statement. Fourth part is going to be analyzing the balance sheet. And finally, the key metrics, or we could also call it as the valuation metrics. So with this, let's first try to understand the company profile of Costco. Costco, as every retail business, started as a single warehouse in Seattle, Washington. Right now, it's world's number 2 retailer, and and it's very easy to guess who's number one. And it started in 1983, so it's almost 42, 43 years in the business. Currently, it's headquartered in Washington, and CEO is Ron Watchus. And the interesting fact about the CEO, Ron Watchus, is Ron joined Costco business in 1984 as a part-time forklift operator. From all the way as a forklift operator, uh, Mr. Ron raised his grade, and currently he is the CEO. Might be if you get a chance, I would definitely suggest to study about Ron Watchus career progression within Costco. Next, the ticker symbol for Costco is COST, listed in NASDAQ stock market, and it was IPO'd in 1985, and it has approximately 340,000 employees all across the world as per the fiscal year 2025 annual report. And finally, it operates in warehousing or hypermarket business. And a key data points about Costco: first founded in 1983, then IPO'd, then went to IPO in 1985. In 1993, they merged with Price Club, and in 1997, their first international warehouse, that was in UK. Then in 2019, they expanded into China. Then in 2024, just a couple of years before, they increased the membership fee. Previously, it was $60 per annum. Then in 2024, they increased it to $65. Then in 2025, they set at 914 warehouses globally. So this is a brief company profile. The next thing is, as of today, if I want to summarize Costco in three operational numbers, they have 914 warehouses spread across 14 countries, and they have 81 million paid members with 145 cardholders. Maybe we would just try to understand why the cardholder member is slightly higher than the paid members. And finally, 92.3% of membership renewal rate, which is almost everyone. They keep on renewing the Costco membership just to shop there. Then the next one is business model. How the business model, or how actually Costco works. In my opinion, there is four key things which Costco follows, which is how their business model is built around for the last 4 decades. The first one is the 14% rule, or we can even call it as 15% rule to an extent. So what it is whatever merchandise or products Costco get from their external suppliers or vendors, they only mark it up at 14% of the cost. And if it is Kirkland products, which is the Costco signature brand or Costco's own brand, they mark it up at only 15%. Whereas if you take a look at other retail giants, they do mark up typically at 20% or more. Then the second thing is zero advertising. In my opinion, Costco's advertising or marketing comes from just word of mouth. And the third one is narrow SKU count. So what this SKU count is, let's try to understand with a simple example of ketchup. If you go to Walmart, you could see at least 5 different brands of ketchup, and each and every brand could have a multiple different size. One can be having a 5 ounce bottle, one can be 10 ounce, one can be 20 ounce, and in that way, each and every brands they have different volume size of bottle. On the other hand, if you go into Costco and look for ketchup, there will be one or maximum two brands of ketchup, and there will be only one packaging size for each brand there. That is the advantage which Costco have compared to other retailers like Walmart or Target. In this case, what happens is the overhead cost to negotiate with the suppliers or the brands is lesser from the Costco's end, and they will have an upper hand in negotiating the cheaper prices with the suppliers. So this is also one of the major reasons why Costco can give the products in bulk in much lesser price compared to other retailers. Then finally, the membership gift. Of course, every member or every household, they pay $65 per annum just to enter into the Costco. So in my opinion, these are all the four strong things which glue together the Costco's entire business model. The next one, the warehouse growth. Costco is not an over the night business. It has been there for at least 4 decades now, and it has been consistently grown. And we would take a look at how the total warehouse grown over the period of last 10 years. In the end of fiscal year 2015, there is 686 stores. From there, consistently the count have been increased, and in the most recent fiscal year, that is end of 2025, they had 914 warehouses. Even in the year 2020, during the peak COVID time, they have consistently opened the new store. That shows how consistent and how confident the business is in opening the new warehouses. So in the last 10 years, they have opened 228 warehouses. In the look, if you look at the 10-year CAGR, it is at 2.9%. It is at a not very flashy thing like they open a lot of warehouses over a period of time. It is a steady growing number. And then by end of fiscal year 2025, they have 914 warehouse, 24 new warehouse compared to the previous year. So the next thing what I would like to understand is where this 914 warehouses are located. So that is where the first thing is in the US plus PR, there is 629 warehouse. In Canada, there is 110 warehouse. So just by US plus Canada, they have around 740 stores, which is almost 75% of the total stores which they have. On top of it, there are bunch of stores in Mexico, Japan, UK, Korea, Australia, then 14 stores in Taiwan and 7 stores in China mainland, then Spain, France, Sweden, Iceland, and New Zealand. So they are spread all across the world, but predominantly US plus Canada, around 75% of their stores are located. Then the next thing what I would look at is how much the total number of paid members are there for the Costco business. Because in my opinion, the membership cost drives the business for Costco. So there should be keen interest to look at how much paid members are there for Costco business. So this is how the numbers looks like for the total number of paid members. In the fiscal year 2016, they had 47.6 million, and by end of fiscal year 2025, they had 81 million paid subscription or paid membership. So over the last decade, they added 33.4 million paid members. Then if you look at in the CAGR number, it grown at 6.1. There is not even a single year where the number is stagnant or the number has been declined. And finally, compared to the last fiscal year, they have increased 4.8 million members. This chart projects us how loyal the Costco members are and how frequently and how well they keep on renewing the membership. On top of it, Costco is also trying to acquire the new member into their business. And next thing, what I would also try to look at is the membership. What are the membership plan available? We have seen Costco have reported 81 million members by end of fiscal year 2025, with the card holders as 145 million members. Might be it's not very surprising to see why the total card holder is higher than the paid members, because if you recollect, there is two membership tiers in Costco. One is the Gold Star, or they call it as, or they also refer it as household membership, and the next one is the executive membership. In the executive membership, if you buy it, you can get the two cards. You can get two cards for one household. That is why the total card holder is slightly higher than the paid members. Then, while looking at Costco, it's also important to touch upon the Kirkland. Kirkland is their signature brand or their homegrown brand. Like how wins, like how Walmart has a great value, Costco has Kirkland, which is their own private label. So the Kirkland was found in 1995, and Costco has 15% of markup price for all the Kirkland products, whereas for other products which they are getting from external merchandise, they would mark it up at only 14% each. And finally, as of the fiscal year 2025, Kirkland product contributed to 33% or one third of the total sale of Costco business. So next, what I would like to point out is Costco is not just a warehouse or just another retail store. It has a lot of ancillary business attached to it. Those are, the first thing is gas station. To be honest, first I got the Costco membership just to fill the gas in Costco because it is easily less than 20 or 25 cents less per gallon compared to the other gas stations across the town. Next thing is food courts. While talking about food court, a special mention to the hot dog price, which is $1.5 for the last 4 decades. And even in one of the press conference, Costco's management have again reiterated they have no intention to increase the hot dog price in near future. Next, they have a pharmacy, and the fourth one is optical and hearing. Fifth one is Costco.com, just to compete or just to stay in touch with all the new age retail business. Costco.com is there, which is online shopping of Costco. Next, Costco Travel. Next one is Costco Credit Card. Might be if you get a Costco credit card, the better part is you would get 5% of cash back whenever we fill gas in the Costco gas station. And finally, for me, it's the most lucrative part in Costco. Costco even started selling gold and silver in their warehouses or even in their online, that is Costco.com, for the last 2.5 to 3 years. If you are someone who does buy gold or silver frequently, and if you have executive membership, it is very lucrative because, say, if you are buying gold for $5,000, you would get 2% cashback, which is $100. That almost covers your executive membership cost for the year. With this, I would like to move to the next topic, that is the real estate. Yes, even though Costco is a warehouse business or retail business, lot of people misunderstanding the real estate part of it. Yes, we have talked previously, Costco have 914 warehouses, but we also need to look at what real estate they have. That is, how many of those warehouses they have it on their own, and how much they have rented it or leased it. That is where I would like to point you to the next key information or the beautiful part in the real estate. So Costco basically owns most of the dirt or most of the land. What I mean is, Costco, out of the 914 warehouses, they own the land plus building for the 725 warehouses, which is almost 80%, 79% of the warehouse. Then for 141 warehouses, they just lease the land, but they have built the warehouse on top of the land which has been leased. And finally, they have 48 warehouses which is fully leased. That is only 5% of their footprint. Someone could ask, right? Why is it even important to understand how much Costco owns and how much Costco lease? So this is where I feel understanding of a balance sheet is much important. Costco, by end of the day, is a US business, and all the US business follow GAAP accounting principle to prepare their financial statement. If you go to the Costco's balance sheet, they could have had something as property, plant, and equipment. In that, land is one of the property, plant, equipment for Costco. Assume Costco could have bought a land 20 years before for $1 million, and they constructed the building on top of it. Even today, if you go and look at Costco, the land which was bought 20 years before, that would still reflect the 1 million as a historical value. As per US GAAP, re-evaluating the land price year on year is not uh, permittable. But realistically, if you look at the price 1 million, which was bought 20 years before, could have been multifolded as of today. That can be even 20 million or 30 million. So while Costco sell the land, or if Costco thinks for whatsoever reason they want to close the warehouse and sell the land, the $30 million will be one of the non-operational income coming into the income statement that will eventually make Costco business attractive and very cash friendly. So that is why I would highly suggest, whenever you look at any business, also look at the real estate. If the real estate is mostly owned, which means it is a hidden balance sheet asset, and if the real estate is mostly leased or rented, uh, as per the real estate grows or as per the rent increase, their expense also increase. That is why special attention need to be given to understand how the real estate of the business works. And while we look at the moat or advantage of a business, it's also important to look at what are all the risks. And I will explain a few risks which Costco highlighted in the annual report. The first thing is membership renewal at risk. Of course, I'm reading Costco's 10K report for last 5 6 years. On all the last 5 6 years, they put this risk. They put up membership renewal rate risk, but I have never seen membership renewal rate is going down. But still, since it is in the 10K, I just want to be transparent on this. So at any point in time, yes, if the membership count goes down, there might be a risk in the business because membership is a considerable revenue for Costco. Second thing is domestic saturation. As we have previously seen, around 70% of the store is in US. So which means each and every new store opening will be competition for the other stores. And the third risk which has been highlighted is international execution. That is, whenever the business is going out of a country, they'll out going out into a new country, they have a new laws to abide by, they have new governing body to abide by. Those are all the, that is also one of a risk for any business. Then the fourth one is supply chain plus tariff. I feel with the current geopolitical tension with Iran going on, there is a lot of supply chain issues happening right now, which might also impact it, because Costco have explicitly mentioned they import a lot of their goods from Asia. So if there is any supply chain issue there, that would also be an impact. And the next risk, which Costco even highlighted in their annual report, is their competition with their other retailers like Walmart and Amazon. Amazon, they have the same day delivery, and even for some qualified product, they have 2 hour delivery. And even Walmart, right now, they're expanding their online business, which is also something which Costco highlighted in their 10K report as their risk. So that's it for this video. I feel these are the key points which everyone need to be aware of about the Costco when we are trying to do the fundamental analysis. And in the next part of video, we will analyze the historical income statement for 10 years and see how the Costco business have evolved. In this second part of the series, we will discuss in detail about Costco's historical income statement. So throughout the series of doing a fundamental analysis, I will be using this application Apex KPI, which is which I have developed personally for myself to do fundamental analysis of any stock. So even before looking into the numbers, I would like to just give you what you can expect throughout this video. First thing, while doing an income statement, we will try to understand what is the revenue of the business. Second thing is margin. Of course, we will go over all the three margins, that is operational margin, gross margin, and net margin. And next one is segmentation. What I mean by segmentation is, we know Costco is making a lot of revenue. From which part of the world is it making the revenue, and what are all the subsection is it making the revenue? And the fourth one is tax and expenses. Of course, we need to understand how the taxation works and how much tax the business is paying. And finally, we will try to understand the earnings per share of the business. Because in my opinion, these are the five simple informations or five informations which we would need to take away from the income statement of any business. With that, let's get started. While looking at the revenue, in my application, you can look at it in three different ways. Either in annual format, that is year over year, how the business, I mean, how much revenue the company made or the business made. Or the second thing is you can look on the quarterly basis, and the third one is trailing 12 month. In my opinion, I would always prefer to look at the trailing 12-month revenue. And second thing I would like to highlight is the range. The ranges, or in simple words, the time frame. You can look at the 3 years time frame, 5 years time frame, 10 years time frame, or the maximum time frame. But for this video, I will look at 10 years of historical data in a trailing 12-month basis. So even before looking into a chart, the quick snapshot is the latest revenue is $286 billion for the trailing 12-month ended in February of 2026. And compared to the previous trailing 12 months, the number has increased by 2%. And what I primarily look at is the CAGR. For the last 5 years, the revenue CAGR is 10.54%. And over the last 10 years, the CAGR is 9.01%. And for a business like Costco, which is in the retail space and not in any fancy tech or AI world, maintaining the CAGR at 9% over the last 10 years is a very big positive. This shows how consistent the business grows rather than not depending on any of a cyclical environment. And if you look at the chart over the last 10 years in the trailing 12 months, we don't even see even a single quarter where the revenue is getting stagnant or getting decreased. Historically, for the last 10 years on all the trailing 12-month basis, the Costco's revenue have grown consistently quarter over the quarter. And the second section which I would like to go to is the margins. Even in the margins, you can look at in two ways, either the annual margin or quarterly margin, but I always prefer to look at quarterly margin, and again 10 years. Again, a quick snapshot before looking into the chart. Gross margin is 12.76% as of quarter 1 of 2026, and the operational margin is 3.74%, again as of the same time frame quarter 1 of 2026, and their net margin is at 2.92%. Again, I am going to look at the last 10 years of data on a quarterly basis. For instance, I'm just taking out operational margin and net margin from the equation, and I'm just going to see the gross margin. And the gross margin for Costco business for the last 10 years uh, is consistently between 12 to 14 percentage. And next thing, if you want to look at the operational margin, even the operational margin over the period of last 10 years is between somewhere between 3 to 5 percentage. That is, from the gross margin, we are just taking out the SGA expense, but we will talk about the expense in detail in the upcoming sections. And finally, net margin. So technically, if you look at the net margin, again, it is hovering over between somewhere between 2 to 3.5 percentage. And the next thing what I would like to understand in the income statement is segmentation. The what segmentation basically means is, yes, we have talked in detail in the revenue section. Costco has generated $286 billion in revenue. But Costco is not just a single business, as we have talked in the first part of video. So Costco generates revenue from multiple sources, and Costco have given what are all the different sources. I'm just going to show you this snapshot. This is directly from Costco's 10K report before we jump onto our application and seeing what segmentation is. And the first segmentation they have given is foods and sundries, which includes sundries, dry groceries, candies, cooler, freezer items. Even liquor and tobacco is included in food and sundries. And the second section which they have mentioned is non-food item, which basically includes all the appliances, electronics, hardware, lawns, and all the other items. Jewelry, even to a matter of fact, is included in non-food items. Then fresh food, this is basically the meat and the bakery section in Costco. Then next one, warehouse ancillary. This is basically the gasoline. The Costco's gas station is one of my favorite. Then it includes pharmacy, optical, food court, hearing aids, and tire installation. This section is considered as warehouse ancillary. And finally, other business, which is e-commerce, business centers, travel, and other. Now coming back into our application and see how much revenue each and every section has generated for. Foods and sundries, this is basically generating 40 percentage of their total revenue. Then they have non-food items, which is at 25.9 percentage. Then other section, which includes ancillary and the other business, as we have seen in this previous snapshot, which constitutes around 18.6 percentage of the total revenue. Then the fourth section is fresh food, which contributed to 13.8 percentage of the total revenue. And finally, the membership. This is the prime, the differentiator between Costco and other retailers, which is generating 1.9 percentage of the total revenue. Next thing is geography, that is in which part of the world Costco is generating most of its revenue from. So as per the latest annual report or the latest data from the US, Costco is generating 72 percentage of 72.7 percentage of its revenue. Then from Canada, they are generating 13.4%. And even if you look at historical numbers, I'll just take out Canada and other international operations and just see US. In the year 2016, US have contributed to 72.9 percentage of Costco's total sale. And even if you just scroll through, the number is historically in the same range between 72 to and 74 percentage. And same with Canada. Canada is also around that 12 to 14 percentage mark, and whereas the other international operation, which is approximately around 14 percentage of the total mix. Then the next section, what I want to look at is expense and tax. So a quick snapshot here, cost of revenue or COGS for the most recent quarter is 87.2, and R&D expense is not applicable because technically Costco doesn't need any R&D. It is just in a warehouse business, so they don't do any R&D much. But still, I would like to have this information because most of my investment is in tech sector, so it will be helpful for me to see how much the other business are spending in R&D. And SGA expense, which is selling general and administrative, is 9.1 as of the most recent snapshot, but we will look at how historical number is. Then operational income, which we already see, and tax rate, which we would need a special attention later part of this section. So basically in Costco, expense is very simple. There is only two expense. One is the cost of revenue. Might be I will just take out this section. Cost of revenue, if you historically see, it is between 87 to 88%. This again correlates with what gross margin we have seen, because by just taking out the COGS or cost of revenue, we will get the gross margin. This again reiterates the same thing. And next one, SGA expense. This is what I would like to see here. I will just take out the COGS and just see SGA. The selling, general and administrative has also stayed around somewhere between 9 to 10%. Over the period of time, as and when the revenue grows, the SGA expense haven't increased much or neither reduced much. So they are still maintaining at a consistent pace of 9 to 10% as SGA. And next, what I would like to show you is the tax history. How much tax the business have paid over the period of time. Not an absolute dollar amount, but the effective tax rate. Again, to be very clear, what I mean by effective tax rate is the tax paid by the business in that period, either in the quarter or the annual, divided with the total taxable income of the business. So now, if you see Costco's number, I am seeing it on an annual basis. It is from August 2011. In August 2011, if you see, it is at 35%, and the number is same till 2017. From 2018, the number dropped, and it is around the 25%. In the most recent year of August 2025, Costco paid 25% of the taxable income as the tax to the government. And I would like you to just think through why the taxation rate was much higher, which is approximately 35% pre 2018. And after 2018, what change have been done in the US taxation so that the taxation is at 25%. And finally, the earnings per share or EPS and the total share. Because whatever income statement you read through, they end it with the earnings per share. So, in simple words, how the earnings per share or EPS is calculated, the net income over the period of time and divided with the total outstanding share. That's how we get the EPS. Might be the first thing we will just, rather than seeing the EPS, we will see the net income because this is going to be the numerator of this calculation. You see the net income is consistently increased for the period of time, and the outstanding share, this is going to be the denominator in our case. And even the outstanding share, unlike many of the tech companies, they do share buybacks. Costco is technically not doing or not spending much in share buyback. Rather than, if you see through this period, the total number of outstanding shares has increased. But again, from this period of August 2022 to the most recent quarter, it is hovering around the same region. In the last 10 years, if we just want to see, the total outstanding share was between somewhere around 440 million till 445 million, which is just hovering over between the 1% upwards. So now, by just dividing this net income with the total outstanding shares, we do get the EPS. EPS is the final metric which any investor or any analyst would like to understand from the income statement. So what we can tell a story from this EPS chart is consistently the earnings per share number have been increased. Even though the outstanding share count have slightly increased over the last 10 years, that is not showing any impact on the EPS. EPS has been consistently grown, and as of the most recent quarter, which is Q1 of 2026, the EPS is standing at $19.26. So these are all the information I would like to get from any of the business income statement. So that's it from this part of video. In the next part of the video, we will go through the cash flow statement in detail and figure out what are all the informations which we can get out of it. Hey everyone, welcome to third part of Costco stock fundamental analysis. In this third part of the series, we will try to analyze Costco's cash flow statement. If you haven't watched the first two parts, where we have covered about Costco's business model and Costco's historical income statement, please make sure to watch those two videos and please continue watching this part. So the first thing what I would like to understand is what is the cash flow from operation over the period of time? Is the cash flow from operation the positive value, or is it growing over the period of time? So in that lens, if we look at the numbers for the last 10 years in the trailing 12-month basis, cash flow from operation is all positive, and it is technically it is growing. I mean, if it's it, and technically, if not, it is growing consistently. It is at least it is growing over the period of time. And the second information I would like to see is compare operational cash flow with the net income. Why? The reason is a lot of business with some accounting gimmicks can show net income as positive over the period of time, but it is technically not possible to gimmick anything or to manipulate anything in the operational cash flow, because in operational cash flow all the accounts payable and the accounts receivable will be stripped off, and Operational cash flow shows the actual number or actual dollar amount which has been deposited into the business account but during that period. So that is where I would like to see this graph. That is, if we look at this most recent point, that is the operational cash flow is $15 billion, whereas the net income is around $8.84 billion. And historically, if you see the line which is in the green straight line, which is the operational cash flow, and the green dotted line is the net income. Technically, you could see all the period of time, the operational cash flow is greater than the net income. Or even to talk in simple terms, what I did is divide the operational cash flow of the business with the net income over the period and plot it. If the number is above 1 consistently, which means all the dollars which they are showing in the net income is getting deposited into their bank as per the during the time frame. So that is why this number is more important to look at while looking at the operational cash flow. So my second check is done in the operational cash flow for Costco. Then the third information I would look at is non-cash back items. Technically, all the business you look at, there will be two components. First thing is depreciation and amortization, and the second one is SBC or stock-based compensation. So if you look at the depreciation and amortization for Costco, it's historically growing. Yes, of course, whatever buildings or whatever machineries they have, they do depreciate gradually, and there is no surprise in seeing the depreciation value steadily increasing over the period of time. In the most recent trailing 12 months, their depreciation is about around $2.54 billion. While looking at the stock-based compensation, again, as a business grows, a lot of top executives they get paid in the stocks rather than cash. Even this number, you could see it's consistently growing, and in the most recent trailing 12 months, stock-based compensation is $911 million. And finally, what I would like to look at is the other working capital items. So what I need to understand from this chart is, long story short, working capital contains lot of items like accounts payable, inventory, and accounts receivable. But for considering the time frame of this video, I'm not going to talk about all these three things individually, and I'm just going to take total working capital as a one. What I need to understand is the total working capital during the time frame, is it positive or negative? If it is positive, which means the company is earning the cash. If it is negative, the company is draining the cash. In this case, wherever you see the red dot during the time frame, the business is draining the cash. Wherever there is a green dot, which is positive value, the company is efficiently collecting the cash back from the customer. So in this time period of last 10 years, Costco has effectively collected the cash back from the customers during the time frame. That is why you could see the total working capital line, which is almost for last 40 quarters, is more likely positive rather than negative. So this is the simple information which we would need from the operational cash flow. Now let's move on to the investing cash flow. In the investing cash flow, again, I'm looking at the trailing 12 month for 10-year period. The first thing in investing is capital expenditure, or in short term capex. As any business or as any growing business, you would expect the capex to grow historically. That's what we are seeing. Maybe for the first 3 years here, it's not growing. But then from 2020, I think post COVID, the capital expenditure of Costco is gradually rising. And in the most recent trailing 12 months, they have spent $6.19 billion in capital expenditure. And the third information I want from capex is capex by depreciation and amortization ratio. We have seen what is D&A, that is depreciation and amortization in operational cash flow. I would like to divide that number with the capital expenditure and see what is the ratio. If this ratio is 1, which means the company is spending more money into the capital expenditure than it is depreciating. If this ratio is less than 1, which means the company is not trying to grow or scale up their business. So in this case, capex by DA, depreciation and amortization ratio of Costco is consistently above 1.7 over the last 10 years. This shows why Costco is able to open new stores consistently over the period of time, which we have discussed in the first part of this video. And the second thing what I would like to understand is free cash flow. Most of pro investor, including Warren Buffett, he always suggests free cash flow is the king, and that is what we would like to understand from the investing cash flow. While looking at free cash flow, I would like to see three information. The first thing is, what is the dollar value of free cash flow? Even here, if you look at Costco's free cash flow is not consistently growing. There was some growth, then some dip, then some growth, some dip. which means Costco is regularly trying to put a lot of capex as any growing business that is expected. But by end of the day, even after spending for capex, their free cash flow is positive. That is the first thing. Second thing is, as I always prefer, rather than looking at dollar term, always prefer to look at in the margin. That is the free cash flow dollar which you have seen divided with the revenue, you would get a percentage. That percentage makes more sense. By looking at this number, in 2016 they had around 1 to 2% of free cash flow, but as of the most recent percentage, their free cash flow margin is 3%, which means they are not very fancy growth or fancy free cash flow margin business, but steady and consistent growth business. And the next one, what I would like to see is marketable securities, because a lot of business they invest elsewhere as well. Not all the cash is invested into the business. They also invest in some marketable securities like treasury bills or treasury bonds. So this chart shows us how much they have invested in marketable security. That is, other than business, what they are investing in. So I'm just showing one piece of chart here, that is on as of May 2026, they purchased $935 million worth of marketable security, and they have sold or matured around 899 million. So this historical chart shows for each and every period how much marketable security they have bought or they have sold. And what I could understand from this is Costco technically is spending a lot of money other than this business, that is to purchase marketable security as well. And the next one, what I would like to see is the net flow. The net flow is how much they have purchased capital. I mean, how much they have purchased the net securities, net out with how much they have sold or matured. That is, in this chart, we could see they have purchased 935 million and they have sold or matured is 899 million. That is, still they spent $36 million, which went out of the business into marketable security. That is the number which you would see here. That is 36 million during the time frame is went out of the business. Then the next one I would like to understand is capex versus security. That is, how much the business is spending in expanding their business, that is growing new, I mean opening new store in the Costco space, versus putting the money in the safe asset like treasury bill and treasury bond. So in this case, for the most recent year, or for the most recent quarter, the capital expenditure is $6.19 billion, and the amount they spent on security is 935 million. That is, the capex is for 80. That is, they are spending 87% of the money in capex, and only 13% of money is invested in a security. This shows that the business is keen in expanding their business rather than just putting their cash in the safe asset. If I want to put it in again in the ratio, that is capital expenditure divided by um, you know securities, marketable securities, this is how the number look like. As of the most recent quarter, their ratio is at 6.62x. That is, for every $1 they are investing in marketable security, they are putting $6.62 in the capital expenditure. So this again shows the nature or the business which steadily grows over the period of time. And the next one is financing cash flow. In the financing cash flow, the first thing what I would like to understand is, does this business pay any dividend? In this case, the first thing is we could see the dividend in three lens: dividend per share, a dividend yield, and dividend payout ratio. So technically, if you see, Costco is paying dividend consistently for the last 10 years on quarter basis, and their dividend yield is at 0.13% or 0.2%. But for me, what is more important is payout ratio. Payout ratio is nothing but the total dollar amount of dividend paid divided with the net income. This shows me how much of the cash which the business earned has given back to the shareholders. In this case, it is 29.8%. That is, if Costco earned $100 as net income, they gave back $29.8 to the investors back, which heavily shows that Costco is trying to reward back its shareholders rather than keeping the cash to itself. But yes, at certain points, you could see the ratio is much higher, around 300%, 400%, because Costco gave special dividends time in and time out. That's why this number is higher. Then the next one, what I would like to understand is their share buybacks. Most of the business, they do share buyback. If we look at Costco, Costco is also doing share buyback, but not at very fancy number. Like a lot of tech companies, they do billions of dollars in share buyback, but Costco is staying at 100 to 200 million dollars. And the next one, what I would like to see is the total payout ratio. So what this means is, Costco is giving dividends and buybacks consistently over the period of time. I would like to compare that number with their net income. So in this case, what I did is took the dividend plus buyback divided with the net income and see the ratio. That is the ratio what I would like to see here. So consistently over the period of time, this total payout ratio is around 40 to 50 percentage, barring one or two time frame where they give a special dividend. Other than that, technically they are, technically Costco is returning back to shareholder rather than keeping everything in the retained earnings as equity. And finally, the net debt changed over the period of time. Yes, by end of the day, Costco has some debt. This chart shows us how much debt they have repaid over the period of time. So how this chart is populated is any new long-term debt taken netted out with the repayment of a long-term debt. So in this case, we could see the number is very small, which is Costco is not taking any new debt. Even though if they are taking any new debt, they are netting out with paying out the old debt. So that shows us this number. So now we have discussed. So now we have discussed in detail all the three cash flows, and finally we could see the cash flow summary. So the cash flow summary is nothing but just the three numbers, which is operational cash flow. For any growing business, I would expect this number to grow. Yes, from 2016, it was $3.29 billion. In the most recent quarter, it is $15 billion. It is growing consistently. And the second thing is investing. For any business to grow, they need to invest in their business, like open new stores or purchase the uh, open new stores or do PPE. So in this case as well, Costco is investing consistently. In the August 2016, their investing cash flow was negative. Investing cash flow was $2.3 billion, whereas in the most recent quarter, it is around $6.3 billion. And finally, cash flow from financing. This I don't have any preference either it should go up or go down, but it's at a consistent level. Then finally, the cash shield. By end of the day, what is the cash the business is owning during end of each and every quarter? If this number during August 2016 they had $3.38 billion, then the number grown consistently, and as of the most recent quarter they have $18.95 billion in cash. So that's it. We need to understand from the cash flow statement. By looking at this, what I would summarize is Costco's operational cash flow is growing consistently year on the year. And in the investing front, Costco is spending a lot on capex. That suggests that also indirectly points us to why they are able to open a lot of new stores over the period of time. Then, from the financing perspective, they are giving back consistently the returns to the shareholders, either in form of dividend or the share buyback. So that's it for this video. In the next part of video, we will come back and do the analysis on balance sheet and figure out what are the numbers or the story it has to say to us. With that being said, thank you so much for watching. If you want to play with this application, I'm just giving you the link of my application here. You don't need any credit card or anything, just a sign up and you can start using the application. Thank you and take care. Hey everyone, welcome to the fourth part of Costco stock fundamental analysis. In this video, we will analyze historical balance sheet of Costco and figure out what narrative it has to say to us. Through this video, I will be using my own application Apex KPI for analysis of the stock. If you would like to play through with my application, I am giving the link of my application in the description section. You just need to sign up and you are good to use. It doesn't need any credit card details. With that, let's get started. So I have already pulled up Costco fundamental analysis or Costco stock analysis. In that, let's go to the balance sheet section. In the balance sheet, as we know, there will be three sections. First one is asset, second one is liability, third one is equity. So we will go through in the same order so that it makes more sense. And finally, balance sheet ratios. That's the final section we will look at. So first, let's get into the assets. Again, you could look it into different lengths, 3 years, 5 years, 10 years or maximum, but I would prefer to look at it the 10 years level, so that I would see historically how the company have performed. So in the asset section, the first information I can see is the total assets Costco business have is $86 billion. Out of $86 billion, $45 billion is the current asset. and $41 billion is a long-term asset. So this chart is the total assets for any growing business. I would expect, or you would expect, the total assets to grow. That is the first thing which we could see here. The total asset is growing consistently over the quarter over quarter. Then the second one, asset can be broken into current asset or short-term asset, which is worth within the period of less than 1 year, and another one is a long-term asset. So first, let's look at what is the current asset composition. So Costco have mentioned four segments as a current asset. First one is cash and short-term investment. Second one is net receivable. Third one is inventory, and fourth one is other current asset. So here we can uncheck these three things and first look at the cash and short-term investment. If you look at the cash and short-term investment, in 2016 they had around $4.7 billion. Then consistently they have grown. As of the most recent quarter, they have $20 billion in cash and short-term investment. So all in looking at the absolute dollar term, they are looking at all-time high cash and short-term investments. Next thing is net receivable. That is for the we will check out cash and short-term equivalents. If you see the net receivable, it is also increasing. That is, as a business grows, might be the net receivable will also increase. And this net receivable is the value which the customers need to pay back to Costco for the service or the products which they have got. This is also a good value. This is the second information which you have. Third one is inventory. Of course, Costco as a warehouse business or retail business, they need to stock up their warehouse with inventory. Their inventory is at $20 billion. Might be if we now look at uh, right now the cash and short-term investment or inventory are going hand in hand. That's how historically their numbers are also performed. Then finally, other current asset. That's also a short value, which is around $2 billion. Might be $2 billion is a huge value, but compared to Costco scale, $2 billion is a very minute value. So these are all the four sections which Costco have reported the current asset. But I would also look at this in a different lens. That is, as part of a total asset value, that is, say, we've seen in this previous chart that the total asset is $86 billion as of the most recent quarter or as of the most recent reported period. I would like to understand what is the percentage of cash and short-term investment or each and every section to a percentage of the total assets. That gives me a different perspective. So for here now, I will just switch to percentage of total. If I do so and just take out the cash and short-term investment, I could see at a point as of the most recent quarter or the most recent reporting period, 23.14% of the total asset is sitting in the cash. But if we look at in the absolute term, you could see $20 billion, which might say they are sitting in all-time high cash, but it doesn't say the other picture, right? Even previously, they were sitting at around 24% of cash. So why I would like to look at in this perspective is by just looking at the dollar term, some number might be misleading. That's why we wanted to see the historical number and figure out how the business have performed. So similarly, for each and every section, I would also look at the percentage of total asset. Net receivable, which is a very minute value between 2% to 5%, hovering over between the same range. Inventory for any business, for especially for the retail business in Costco, inventory will be expected to be high, and as of the most recent quarter, they have 22% of inventory, and historically the inventory percentage is between 20 to 30%. Then finally, the other current asset, which is again a very minute value, like how we saw for the net receivable. So these are all the four sections which Costco have mentioned as a current asset or the short-term asset. Now looking at the non-current asset or long-term asset, they have four line items. The first one is PPE, that is property, plant, and equipment. Second one, goodwill and intangible. Third one, long-term investment, and fourth one, other non-current assets. Let's uncheck the three and look at the PPE. As we have discussed in the first part of video, Costco is regularly opening up new stores, which means they are investing a lot into their business that goes into PPE. That is why you could see consistently the PPE is growing. As of the most recent reporting period, they have $37 billion in the property, plant, equipment. Next one is goodwill. Goodwill, they have reported for some period, but they don't have any goodwill in the most recent pre-reporting period, so it's very negligible. Similarly, they don't have anything as long-term investment. And finally, other non-current asset, they have certain value. But we would also look at it the same lens how we looked at the current asset in terms of total assets. If we do this way, property plant equipment is around 45% or 42% of their total asset. That's how the Costco business is, because most of their asset are in their land, building, and the machineries they own. That's as expected. Goodwill is very minute value, just 1% for 3 quarters. Long-term investment, Costco haven't reported any as such. Then finally, other non-current asset is 5%. So this is the simple information. These are all the key information I would say, which we could get from Costco's asset section. Now let's move on to the liabilities. Even in the liability section, we would see that in the two different lines, current liability and non-current liability. Before that, the total snapshot of total liabilities that is growing, that's expected. Now let's look at the current liabilities. Current liability have 5 sections: accounts payable, short-term debt, tax payable, deferred revenue, other current revenue. Sorry, other current liabilities. I would take up everything. Just see the accounts payable. Accounts payable is consistently growing, but we will prefer to look at in the dollar. I mean, percentage term. In the percentage term, one thing I love about this Costco business is their accounts payable contributes around 42% of total liabilities as of the most recent reporting period, and historically it has hovered over between mid 30s to mid 40s. Why I feel this number is good is Costco has a good leverage. That is, they purchase the products from their suppliers or the vendors, and they have a leverage to pay the cash after 30 days or 60 days. That is what accounts payable is. That is the cash which Costco as a business owes to the suppliers or vendors. By seeing 40% of liability sitting in the accounts payable, this tells me two things. Whatever accounts payable is, they don't need to pay any interest. Say even after 30 days, they're going to pay the same value or the same cash which the supplier has provided the funds for, provided the inventories for. So this is the first thing. Second thing is short-term debt. If you look at it in the percentage of the total liability, the most recent reporting period, they just have 0.18% of their total liability as short-term debt. This is a very minimal value. Third one is tax payable. They don't have anything as such tax payable in the current liabilities. Deferred revenue, they have very minimal value, which is around 5.97%. And other current liabilities, that is, they might have accrued liabilities like accrued salary, accrued any employee compensation, that is around 22%. And now moving on to the long-term liability or non-current liability, they have 3 sections. One is long-term debt, deferred tax liability, and other non-current. While looking at it in the total percentage value, long-term debt around 2017 they had 27% of total liability in debt, but as and when the business grown or business is progressing, in the most recent reporting period they had only 10.7% of their total liabilities as a long-term debt, which is the interest bearing debt is very less for Costco. Then deferred tax liability in long term, they don't have anything, and other non-current liabilities or other long-term liabilities around 5%. So in summary, if I want to have a so if I want to summarize the liabilities of Costco, I would summarize it in two things. Accounts payable constitutes around 40% of liability, which is a very big thing, or which is a very good thing for the business because they don't need to pay interest when they pay back to their suppliers or vendors. Then, even though any business would like to have a debt, Costco is also having debt, but historically their long-term debt which they had has been reduced, and they are only having a 10% of their long-term debt. This is the two summaries or the two takeaways from the liability section. And third, let's move on to the equity section. So before looking at the equity section, this is a quick snapshot. They have a total of $33 billion in equity. Out of the $33 billion, $26 billion is coming as a retained earnings. So this is the total equity over the period of time. As of the most recent quarter, they have $33.5 billion. That's the same value which you have seen. Now let's understand what are the components in the equity section. There is 6 components. First one or the first two, which goes hand in hand, is common stock and additional paid-in capital. For any business, you would expect these two numbers. Third one is preferred stock. Fourth one, retained earnings. This contributes to the majority of the retained earnings for Costco. Fifth one is AOCI, other comprehensive income, and fifth one, the last one is other equity. So now, if we just take a look at these two sections, which is common stock and additional paid in capital, common stock is going to be a small value, which is 2 million, and additional paid in capital, as of the most recent period, they have $8.6 billion. Then next one, preferred stock, they don't have anything as such as a preferred stock. Whatever stock they do buyback, they would put it into, they would retire it rather than having it as a preferred stock. Then retained earnings, yes, it is growing consistently, but you would see a huge dip from this November 23 to Feb 24 and August 22, November 20 time frame. Think of it, why do you think the retained earnings has dipped? We have already covered the reason why the retained earnings is lesser in cash flow statement, specifically in the financing cash flow. Just connect the reason or just think through why the retained earnings have dipped, and there is a direct answer which is in the financing cash flow. If you want to play through my application, just use the link in the description section, and just register yourself and play through. You would figure out the answer. I feel this is more important for any business student to understand, to correlate all the three financial statements. The next one, AOCI, this is a very minute value which is hovering over between uh, negative $1 billion to negative $3 billion. And finally, they don't have anything as other equity. So this is the section, or this is the information we would like to get from the equity section of a balance sheet. Then finally, I would like to review some of the ratios. So the first thing what I would like to see is, what is the total debt the business have, or do they have any debt? In the case of Costco, yes, we have seen in the liability section, Costco is having a long-term debt of around, $5 billion, plus they have very minimal short-term debt. I would like to understand what is the net debt they have. Net debt is nothing but what is the total cash and short-term equivalence they have, subtracted with the total debt. We will get a value that is a net debt I see. So in this case of Costco, they literally don't have any debt. In the most recent reporting period, if you see the small, the tooltip, the net cash is $14.23 billion, which means they don't have any debt. How we came up with this $14.23 billion is cash plus short-term investment. This is the first thing we saw in the asset section. It is around $20 billion, and they have a total debt of $5.7 billion, which is short-term debt plus long-term debt. By just adding it up, they have a net. They are sitting at a net cash of $14 billion. And historically, you see, throughout this period, only 3 quarters they were sitting at it in the net debt, but it is also at a very minimal number. So the first takeaway from this balance sheet ratio number is, Costco is a very healthy company that it doesn't have any debt as such. Second thing is debt to equity ratio. That is the key takeaway a lot of analysts would see. In the debt to equity ratio, there is always a difference between two aspects. One is interest bearing debt, and another one is total liability. So, what is interest bearing debt is, in simple words, what debt to equity, how people will calculate is, figure out what is the total liability, divided with the total equity, we will get a debt to equity ratio. That is a very commonly or generically used debt to equity ratio. But what makes more sense is to figure out what is the interest bearing debt, that is long term debt and short term debt in the liability, divided with the equity. That number gives me a more clarity on what is the interest bearing debt, rather than looking at the whole of the total liabilities. So in this case, the debt to equity ratio, the stricter one is means interest bearing debt. It was at a point of 0.6 during 2017, but the beautiful part is the number has been reduced consistently, and it is at just 0.17 of debt to equity ratio for interest bearing debt. That is, for every $17 of debt they have, or interest bearing debt they have $100 of equity, which means they are sitting in a healthy number. But if you look at the debt to equity at a broader level, that is dividing the total liability at with the total equity, you could see a different story. It says the most recent quarter they have 1.58x. Technically, we prefer to see the debt to equity ratio less than 1, but in the case of Costco, We have seen 40% of liability which Costco has is in the accounts payable that doesn't incur any debt. So that is why I always prefer to see the debt to equity in two lens, one as interest bearing debt and another one as total liability. In this case, Costco's total liability of debt to equity is much higher, that is 1.58, but my interest is more on interest bearing debt, which is 0.17. This is the second information we can get from this segment. Then the third one is quick ratio and current ratio. This is the two information which we'd also like to get. Current ratio is nothing but the current asset by current liability. Always prefer to have this number greater than 1. If we look at historically, sometimes it is less than 1, but predominantly in the most recent 4 or 5 quarters, the number is greater than 1. And next one is quick ratio. Quick ratio is nothing but in the current asset, exclude all the inventories. Just take cash and short-term investment plus net receivable divided with the current liabilities. This number, it would be preferable if you have greater than 1, but it's not. But still, we would like to compare this number with the Costco's peers. But still, it's not a very alarming number. It is at a decent value of 0.66. So this is the two information which we could get from the balance sheet ratio segment in my application. You would be wondering, while looking at the balance sheet, we also need to see the ROE, ROCE, but that is in a different tab in my valuation metric. If you go to this section as return metrics, you could see ROE, ROIC, but that is for a next part of the video. So that's it from this part of video. I hope you found out you found out an efficient way to analyze the balance sheet of Costco or to a matter of fact any business. If you like this video, please consider liking and subscribing to my channel. And if you want to play through my application, please use the link in the description section to play through. If you have any questions or comments, please feel free to just drop an email to the email address given below. Thank you. Take care. We'll see you in the next part of the video. Hey everyone, welcome to the final part of Costco stock fundamental analysis. In this video, we will look at the key valuation and the return metrics while analyzing any business. Throughout this video, I will be using my own application Apex KPI to look at the valuation and the return metrics. If you haven't watched the previous 4 parts of the video, where we have talked about in detail on Costco's business model, income statement, balance sheet, and cash flow statement, please make sure to watch it and watch this video as a final part of the fundamental analysis segment. Quick disclaimer before getting into the numbers. This video is not going to be any sort of financial advice. This is just me looking at the historical number and thinking about the narrative, what it said to me. So with that, let's get started. Now I am into my application. I have already pulled up Costco in the stock analysis, and I am looking at the valuation and return sections. Might be if you want, you can play through my application. You can just use the link in the comment section, or you can just type in apexkpi.com. You just need to register and you will be good to use. As of now, it doesn't need any credit card detail or payment. I'm just testing out as a pilot version, so you can start using it. And if you have any questions or comments or feedback on the application, please let me know. So once you come into the P by E ratio in my application, by default diluted P ratio will be selected. But if you want, you can switch into basic. But for me, diluted gives me a clear picture rather than basic. So we are going to look at 10-year historical data. If you want, you can look at 5 years, 3 years. Accordingly, it will change. A quick snapshot before we look at the chart is, as of now, the current P ratio is 47.9x. On 1 year average, it is trading at 51 P ratio. On the 3 years, it is trading at 50 PE, and on the 5 year, it is trading at 46. So by looking at this number, you could get a sense of the historical numbers, historical average value of P by E ratio. Now, looking at the P by E ratio chart for the last 10 years, during 2016, it was trading at 29.3x, say roughly 30x. Then consistently it stayed around this value till 2020 or till the COVID hit. Then might be what I'm seeing is from 2020, early 2020, the value shot up, the P multiple shot up to 40x. Might be my thought processes during the COVID time, we had a lot of uncertainty. So a lot of investors thought anyhow Costco business will survive and they might be invested a lot, which might have taken the valuation to a higher multiple. Then we had all this interest rate increase or interest rate cut. Then might be the valuation could have dipped to 32x. Then again it shot up. But the most significant rise started during 2024, where it was trading at around say 35x. All the way it shot up to 62 PE ratio. Then again, it saw a huge decline. Might be this is a time frame where predominantly the tariff part hit in. Then again, it shot up to a certain level. As of the most recent time, it is trading at 47.9x. So while talking about the PE ratio, I also try to compare it this business with their competitor business. We know Costco's close competitor is Walmart. For that, what I did is I just opened a new tab and I went to the peer comparison module. In this, I'm just going to compare Walmart and Costco, and let's see how the P by E ratio looks like. So here we have multiple modules. If you want, you can play through, but now I'm just looking at the P ratio section. If you look at the P ratio section for the last say 7 years, this is how the numbers looks like. We already seen Costco is at around 47 multiple and Walmart is at 39 multiple. So both are commanding a high premium. As of now, might be July first week of 2026. Even the big tech companies like Google, Amazon, Meta, they are trading sub 30 multiple, whereas Costco is commanding, I mean, both Costco and Walmart are commanding around 40 multiples. And the next section which we want to look at is price ratios. In price ratios, I have two sections. One is price to sales and another one is price to book. Predominantly, where I look at price to sale ratio is if the business is new business which doesn't make profit, then it makes sense for me to look at price to sales. But Costco is a well established business and making consistent profit, so I don't like, I mean, it doesn't add much value to look at price to sales. Price to book, similarly, it makes sense only to look at when we are evaluating financial sector. So I'm not going to look at this information as well. Then we have enterprise value multiples, that is EV by EBITDA, EV by sales, EV by free cash flow. All these sections or all this information will make more meaningful if you compare it with the peers. Here we have EV by EBITDA, EV by free cash flow. If you want, you can just play through, but considering the length of this video, I'm not going to look at right now. Next one is cash conversion cycle. I feel this is the most important metric for any business I would look at. In simple words, let's align on what conversion cycle, cash conversion cycle is. It gives us a number of days it takes for a business to convert $1 of cash sitting into the bank account into the inventory, then sell it to the customer and collect the cash back from the customer. So this is what, in simple words, cash conversion cycle is going to give to us. So by looking at the summary, cash conversion cycle as of the most recent quarter is 0.5 days, which is a very good number. And I'll tell you how this value is calculated. So first, this is how the cash conversion cycle for Costco look like for the last 10 years. It is consistently less than 10 days, which is within 10 days, Costco is able to collect the cash, I mean, make the inventory, sell it to the customer and collect the cash back from the customer. If you are curious how this value of 0.5 days is calculated, you need to understand the three metrics again. The DSO, which is days sale outstanding, DIO, days inventory outstanding, and days payable outstanding. Again, if you're curious how this DSO, DIO, DPO is calculated, you can just scroll down. I also have a slide, widget here which you can read it through. Days sale outstanding or DSO is nothing but how many days or how long it takes for the business to collect the cash back from the customer. So in this case, if we look at the DSO, which is around 4.8 days, and then days inventory outstanding is how many days a product is sitting in their shelf or in the inventory, which is around 28 days. Then DPO, which is days payable outstanding, is a day how long or how many days the Costco takes to pay back its supplier and vendor, which is around 33.1 days. So by adding DSO plus DIO and netting it with DPO, we will get a value which is a cash conversion cycle. So lesser the cash conversion cycle, or historically if this cash conversion cycle is number is getting reduced, the business is doing good. And if you see any business with negative CCC or cash conversion cycle, which is the business is running at a gold standard level. Next one is return metrics. The key return metrics which I look at is return on equity or ROE. If you look at this number, the value is between 5 to 9%. And again, if you are more interested to break it down, you might have break it down the ROE. You might have known this DuPont decomposition. If you're interested, you can just play through, but I don't want to make this video much longer, so I'm just skipping it. Next one is debt and leverage. We are already talked about debt to equity ratio and balance sheet. Again, to reiterate, on a historical level, maximum debt to equity ratio they had is 0.5x, and they have reduced it consistently. And as of the most recent day, they have only 0.26x of debt to equity ratio, which is for every $26 of debt they have $100 of equity. So these are all the information which predominantly I would look at from valuation and returns perspective. If you think you would look at any other informations while it comes to valuation and returns, let me know in the comment section. We will try to add it in my application. Then, if you found something interesting or if you found something valuable from this video, please consider liking and subscribing to my channel for upcoming videos. And if you want to play through my application, the link is there, apexkpay.com, or I will also pin it in the comment section. Please feel free to use it. So with this, I will conclude my video. Thank you and take care.